Hey guys, in today's tutorial we are going to go over how to take an application using Calyx Point with the new URLA update. So first you're going to go to File to create a new loan. You always want to go to Borrower because if you go to Prospect it's going to not give you as many options to navigate through the loan. Another way you can create a new loan is by clicking the New button here. Make sure you click New, not Classic. The Classic will be the old application. The new one is the new one. And then the other way you can start a new loan is by clicking this little white page. Borrower, New. These are templates that we use. You don't have to use a template. You can go with New Blank File and click OK. So in the name section, you are going to obviously input client's first name, middle name, or initial if applicable, last name, social security, date of birth. Here you will input a U.S. citizen, permanent resident alien, or non-permanent. Best way to contact the client, phone numbers, as well as their email. If you have their business phone, you can input it here, where they currently live, own, or rent. If it's an apartment or condo, you can choose that here. The city which they live in. And the zip code. The amount of years that they lived here. You're looking to get a 2-year history. And whenever you have a purchase transaction, I always like to just put TBD, and then I'll just copy the same information over. If they're purchasing in Arlington, I'll put that information. If they're buying a house or condo, let's just say they're buying a house, we will do detached. If it's a house as well, detached again. But if it's a condo, you can select condo and attached. Mixed use property. Typically I don't do commercial properties, so I'm gonna always click no here. It's also very rare that I do manufactured homes, but if you guys do, you would click yes. And then the number of units. And then if you have a co-borrower, you would just do that all over again on this side of the application. You can put a rate here. The term, 360 for 30 years. Let's just put a value and a sales price, and a down payment amount. Just do 5% down, and the payment is gonna drop here. For present housing, you would just click add. Okay, that was wrong actually. For present housing, you'll click first mortgage, and then you'll input how much they currently pay. This could be their current mortgage if they already own, or it could be their rental payment where they rent. For insurance, I usually just throw in around $65 a month. County property taxes, for the place I do business in, it's usually 1.25% of the sales price, so it'll automatically calculate that for you. And then I am going to need mortgage insurance if I'm only bringing in a 5% down payment, so I'm just going to throw in a rate of like 0.50. And then if you have any HOAs, you will input them here. So the next page we're going to go to is loan application section 1. In this page, a lot of the data carries over, but what doesn't is if they're married, unmarried, or separated. Dependents, ages of those dependents. That's mainly most important on VA loans. If married, is there a person who is not your legal spouse, but who currently has real property rights similar to those of a legal spouse? So if he's already unmarried, we'll click no here. If you click yes, then you can go through this section with your clients. If you click this box, it's going to copy over what you have in this address. Language preference. I'm sure it'll usually be English for most of you. And then this is where you will put their place of business. You'll put the address, unit designator if applicable, the city, state, and the zip code. Their job title, the phone number of the employer, and their start date. It is very important that you do put a start date, as when you get to running DU, it's gonna give you an error if there's nothing here. And so let's just say he's worked here 11 years. And so now when we get to income, this is what's obviously a little bit different than the old application. It used to kind of like calculate it for you if you put like an hourly amount, but now you kind of have to do those calculations yourself. So let's just throw in 5,000 for base. If there's overtime or if there is any commission bonuses, you can do those now individually. So let's just say he has like $500 a month overtime, and maybe every year he has a Christmas bonus that averages, at $250 a month. If they're self-employed, you'll check this box and then you'll state whether they own more than 25% or less than. And then any other income sources, if you have disability, social security, alimony, you can input those in this section below, 1E. And again, you'll do the same for a co-bar if applicable. So now let's move on to section 2 and 3. So in this section, you have your assets, where you will pull credits, liabilities, and real estate owned. So to add a new asset, you'll just click the new button. Let's just say they bank with Chase. You'll input his, Chase's address, city, state, and zip. You'll select what account type it is, checkings, an account number, and let's just say there's $10,000 there. And you'll do this for any other accounts that you need for assets. And other types of assets, this is where if you have a client departing from a current residence that's being sold, to use that to purchase another property, this is where those assets would go. Annuities, cash on hand, net worth of businesses, unsecured borrow funds, you may be using that one for down payment assistance loans. And then in this section is basically where you would put your earnest money. I believe you can put any credits here as well, seller credits, things like that. In section 2C is where you're gonna pull your credit reports. I'm not gonna go into detail right now on that, but I will link another video below that will show you how to pull credit reports through the new URLA. Once you pull credit, you'll also add your real estate owned in this section, and you can match those liabilities to the real estate owned just like you would prior. Let's go to page 4. Page 4 basically just has, the subject property, loan information, other new mortgage loans on property you are buying or refinancing. So if you're doing a piggyback second, or if also seconds are common with down payment loans, you would add those here. If you're purchasing as an investment, you will input rental income here. Any gifts or grants will be listed in section 4D. Now when we go to section 5, this is the new declarations page. So as you see, nothing has really changed too much here. Just select yes or no, depending on your scenario and situation. Now when you go to page 7 and 8, this is where you will list your demographics. The new thing here is military service. Did your client ever serve in the military is basically what they're looking for, and then you'll finish the demographics as you would have before. Moving on to page 9, this is where you would input your loan originator information, and your NMLS, email, those things, and then your company information will go in here as well. Address, city, state, your company's phone number, fax number, NMLS, and license number. And the new thing that they added was this continuation sheet. If you have anything extra you would like to add, you would input it here. Lender loan information 1, basically ask questions regarding to community property states. It'll list title information as well as general mortgage loan information that you already filled out in the borrower information screen. That'll carry over here. And lastly, when you go to lender loan information -2, it's gonna bring in your fees, closing costs. If you're refinancing, it'll show that here. If you're paying off debts to close, it'll show that here. And basically it'll tell you how much the client needs to bring in at close. So that's basically the update for how to take an application using Calyx Point with the new URLA. If you guys have any questions, feel free to ask them below and I'd be happy to assist you.